Traders were slow to take a position on Wednesday. That was very evident in the outside equities where they all traded on both sides of unchanged. We saw the latest ADP jobless claims for the month of April show the private sector shed over 20 million jobs. That compared to March's number at 147,000. That put more safe haven back in the U.S. dollar, which is now on a multi-week high above the $100 mark. In the energy sector, unfortunately, crude oil will snap its 5-day winning session with the June West Texas Intermediary futures down about $1 on the day. This comes off the latest energy reports, which continue to show a build in U.S. crude oil stockpiles. Now in the grains, they grinded lower much of the day on Wednesday, despite the fact we got out some positive ethanol news with production continuing to pick up for the first week in several weeks. We also saw back-to-back weeks of ethanol stocks in the U.S. starting to drop. Oklahoma crop experts are also expecting the winter wheat crop in Oklahoma to be about 16 million bushels lighter than it was a year ago, but that did little to spur the bulls. We see December new crop corn futures settle 331 1/4, while November new crop soybeans settled at 839 1/4. July Chicago wheat settled at 517 1/2, and July Kansas City wheat settled at 477 1/2. In the livestock trade, that's where the big fireworks were. Live and feeder cattle futures settled limit higher on many of the front month contracts. Lean hogs were also able to settle higher in the green as well. Now we are starting to see packing capacity come back a little bit by little bit. Also out in the country, albeit it's very light trade, there's some strong cash trade occurring on the dress side out in the country this afternoon. June live cattle futures settle 89.47, while August feeder cattle settle $1.3275, and we see June lean hogs settle at 65.57. That is the latest here in the closing markets for this Wednesday, May the 6th. I'm Clay Patton. You have a great afternoon, and I'll talk to you tomorrow.